Well, hello and welcome to this Moneycontrol live stream. We're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the commentary coming in from the US Federal Reserve Chairperson, the trade setup, and all the stocks that will be making headlines in today's session. And if you have any queries, we'll also be having that answered by our technical expert on the show. So if you have any queries, do comment on our live feed and we'll have them addressed by our expert. But before we do all that, let's take a look at the top headlines at this hour. Well, stocks closed mixed on Wall Street following a volatile day. Dow corrects for the second straight session, even as the Fed chairman says that no decision has been taken yet on the size of the potential rate hike at the upcoming March meeting. Asian markets trade largely higher. The Nikkei rallies as the Bank of Japan's two-day policy meet gets underway. Chinese CPI for February comes in lower than expected, while the SGX Nifty is indicating a very muted start for the Indian market. Adani Enterprises, Adani Power and Adani Wilmar get included in the ASM framework for the short term. This comes after the NSE said on Monday that Adani Enterprises will be exiting the ASM mechanism. Meanwhile, on March 6th, promoters of Adani Transmission and Adani Green pledged equity in favour of SBI Cap Trustee. And stocks in the spotlight today are Bajaj Finance, Adani Stocks, Bharat Forge and Sequence Scientific. Well, the big focus this morning is the continuing hawkish commentary coming in from the US Fed Chairperson Jerome Powell and the global market reaction. Let's listen into what the chairperson had to say on price stability and, of course, on the rate trajectory going forward.
So we are the agency that has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law. It's great if Congress helps. It's great if the administration helps, but we have to deliver it. And we will. That's our responsibility, which we fully accept. We don't comment on fiscal policy. That's for elected people, and we have a job, maximum employment and price stability. We use our tools. We try to stay in our lane, stick to our knitting.
Well, the US yield curve has reached its deepest inversion since 1981. But you know what? Even the Indian yield curve has inverted. What does this signify? And what does this mean? Let's go across to my colleague Lata Venkatesh for that. Lata, what does this Indian yield conversion mean and after how many years has this happened?
Well, this has happened for the first time in probably 8 years. Now, we must understand that a yield curve inversion normally means recession. That is, immediately you expect the central bank to raise rates and therefore the rates are high. But in the longer terms, that's why the 10-year yield tends to be a little lower than the 1-year yield. That is classic yield, inversion. But what happened in India yesterday should not be confused with this. And I'll tell you why. There was a general rise in all yields because of the Jerome Powell hawkish statements, which are now 2 days old. The first written testimony to Congress went on Monday evening. So on Tuesday, when we opened for trade, all yields went up across Asia. And in India, the 10-year yield went about 5 basis points higher from 7.42 to 7.472. And at that time, the Reserve Bank was also auctioning 364-day T-bills. 364 days, almost a 1-year bond. That yield cut off at 7.48, above the 10-year yield, if you can see. Now, the traded 1-year bond always tracks the auction. And so that traded yield also went up to 7.475. So just a brief 0.3 basis points above the 10-year yield. Now, we should not confuse this as signals of recession. We have to take it as a signal that yields are rising, that the Reserve Bank will have to hike rates. Now, why is the market coming to that conclusion? Because the Jerome Powell statements were pretty hawkish, and now the US markets, the futures markets, interest rate futures markets, are penciling in probably 3 more rate hikes and maybe a double rate hike as early as March itself when the FOMC meets. Now, how does an Indian think about it? If the 1-year yield or 1-year yield in the US fetches you 5.3, that's where they closed yesterday, then an exporter will rather keep the money in dollars because that is also giving him a decent yield of 5.3. In India, he may get 6% or 6.5%, but then he may lose on currency. The currency may weaken. So if every exporter thinks like that, the dollar flows will not come. Likewise, an FII also would think if the risk-free rate of return in the US is 5.3, 5.5, expected to go to 5.75, why should I come and buy Indian or any emerging market? After all, there is a currency risk in EMs. So the fear in the markets is that dollar flows will dry up. And therefore, to prevent this, the Reserve Bank will have to raise rates. It was this psyche that led to the rise in rates. Just one more point. The reason why the near-term yield went up very sharply is in April, everyone is expecting a liquidity crunch. 3 years ago, when COVID broke out, 2020 April, the Reserve Bank announced a TLTRO, a targeted long-term repo operation. Banks could borrow at 4%, 2 lakh crore from the Reserve Bank to lend. They were trying to pump up the economy. Now that TLTRO ends, it's a 3-year TLTRO, the money has to be returned. When the money goes back to the Reserve Bank, there is a liquidity crunch. So the near-term liquidity crunch and the start of the government borrowing program is expected to push up near-term yields. That's why you briefly saw the near-term yield go above the 10-year yield. It's not a recession sign. It is a signal that yields will go up.
Okay, it's not a recession sign. That's the word from Lata ma'am. Well, on that note, Lata ma'am, thanks a lot for taking out time and putting things into perspective for us. Let's now shift focus to the market technicals and how is the setup looking for today's trading session. For that, we are joined by Nilesh Jain of Centrum Broking. Well, good morning, Nilesh. Good to have you on the show. Well, yesterday we saw a remarkable rebound in the second half of the session. Last hour buying, did push the Nifty above that 17,750 mark or so. Do you expect the Nifty to continue its run given the fact that SGX Nifty has slipped into the red? But we have largely been ignoring global cues of late. What do you say?
Very good morning to Nandika. If you look at the overall structure, no doubt we have seen some sort of a resilience in our market. And the good part is that yesterday we have seen Nifty close at high point of the day, and the momentum has shifted slightly on a positive side. So on a high side, I'm watching out for the immediate level of 17,800 that needs to be taken off on a decisive note. Suppose then we can expect another 200-point move towards 18,000. But for the time being, it looks like the Nifty is still stuck in the range of 17,600 to 17,800. And any dip could be a good opportunity as a buying opportunity for the upside target of 17,800 on an immediate basis. At current level, the risk and reward is not favorable, but I would rather wait for some sort of a decline towards 17,700 to make any sort of fresh entry in the Nifty index.
Right. Let's also talk about the bank Nifty. In fact, the PSU banking pack, SBI, I think it would be the stock of the day for me because it has raised somewhere around 3,700 crore rupees via its third 81 bond issuance at a coupon rate of 8.25%. Now, PSU banks have been trying to make a comeback this year. Remember, last year they were the star performers when it comes to when compared to other indices. Over the last 5 days, SBI has rallied somewhere around 7% or so. Do you expect this up move to continue on the charts?
Yes, definitely. If you look at the major structure of the Nifty PSU banking space, we have seen a strong up move in last couple of years. Now, recently in last couple of months, although we have witnessed some sort of healthy correction, and hence this is giving a good opportunity to make a fresh entry at current level as well. And our preferred bet from the Nifty PSU banking space continues to remain SBI. And our upside target is very much intact of 600 to 650. These are the two immediate targets that we are expecting Nifty SBI to test going forward. The immediate support as far as technicals are concerned is placed at 520. Any decline could be a good opportunity. It's a good stock to accumulate from little longer term perspective. And apart from that, the other two counters that we are keeping eye on is Canara Bank and BOB, where our outlook continues to remain on a positive side. Now coming back to Bank Nifty, in fact, is showing some sort of outperformance compared to the Nifty index. And the upside is very much open for 42,000. So from current level, roughly around 450 points, we can expect Bank Nifty to move on. And on the lower side, the psychological support is placed at 41,000. So as long as Bank Nifty trades above 41,000 in the spot level, decline could be a good opportunity to make a fresh entry for the upside target of 42,000.
Well, Funny PG had a query on all the banking counters that you mentioned. So I hope this answers your query, Funny. Let's also take up another query since we are getting all these a lot of queries this morning. I want to get your thoughts on the Bajaj twins, Bajaj Finance and Bajaj Finserv. Yesterday we saw a Citi come out with in fact Ambit, I beg your pardon, with a sell rating on Bajaj Finance. It says that asset growth is likely to slow down in the wake of stiff competition. And we also have a query on Bajaj Finserv from Prabhu coming in, and he wants to know your long-term thoughts on Bajaj Finserv. How would you view these Bajaj twins now going forward?
See, if you look at the Bajaj Finance structure, which is indicating some more weakness going forward, it is showing some sort of a weakness, and the structure is definitely looking on a weaker side. As far as levels are concerned, on the lower side, it may test 5800 going forward, and if it breaches 5800, then the downside may extend towards 5200. So a major crack can be seen if at all it breaches 5800 on the lower side. On the contrary, if at all it takes out 6400, then we can expect some sort of a relief rally to continue. So for the time being, Bajaj Finance looks negative. On the other hand, Bajaj Finserv comparatively looking slightly on a positive side. We have seen a good healthy correction from 1800 levels to 1200 levels. Now from lower levels, we are witnessing a gradual recovery, and this recovery may extend further towards 1400 to 1450 on immediate basis. And if at all it reaches 1450 levels, there could be possibility of a short-term bottom formation in this particular counter. So I would rather go with Bajaj Finserv with keeping stop loss below 1300 for the upside target of 1450 to 1500.
Well, Bajaj Finserv over Bajaj Finance, that's the call from Nilesh. This morning we've had a brokerage call from Jefferies on metals. It's a pretty bullish call coming in. They've put a buy call on Tata Steel with a target of 145 rupees a share, on Hindalco with a buy call on Hindalco with a target of 570 rupees a share, and Tata Steel is at the topic followed by Hindalco. The rationale here is the China data is, of course, China economy is showing signs of recovery, and the Indian metal pack has been underperforming its global peers, and that, according to Jefferies, is a good sign of buying opportunity in some of these metal stocks. In fact, we also have a query coming in from Suryakant Mahapatra, and he wants to know your thoughts on the metal sector, which stock to enter at current levels. In fact, he's also said that he has positions in Jindal Steel. So which, according to you, is looking much is looking extremely attractive at this juncture? Tata Steel, Hindalco, or Jindal Steel?
Well, I was coming on Jindal Steel as well because that's the counter that we are liking, and this is one of the counter which has outperformed the overall metal basket. If you look at the structure, it is constantly making a high top and high bottom formation. It is trading almost near to its all-time high levels, and the structure looks positive for 600 on immediate basis, and post then it can move towards 650 to 700 zone. The stop loss should be placed below 550. So out of all metal counter, we are bullish on Jindal Steel and Power, followed by Steel Authority, which could be a dark horse, and we have seen a lot of underperformance in this particular counter. And if you look at the structure, it has formed a good nice base near about 81, 82 sort of levels. On the upside, it can move towards 92 to 95 on immediate basis. So Steel Authority is looking positive. Apart from that, Tata Steel, no doubt, we have seen a lot of consolidation, but the structure is not yet turned positive. Although we can expect some sort of a pullback towards 115 to 120, that cannot be ruled out. One can keep a stop loss below 103 for the long position. Lastly, coming back to Nifty Metal Index, it is constantly making a lower top and low bottom formation. To negate this particular formation, it needs to take out 5,800 levels on the higher side. Currently, it is at 5680. So in this spot, if you look at Nifty Metal Index, it is on the verge of a breakout. Post breakout, I think metals are likely to be bottomed out, and we can expect further rally in overall metal counters.
Right, expect further rally in metal counters. Of course, let's also speak about the Adani Group of stocks. Lots of news flow regarding this group every day, in fact. This morning, Adani Enterprises just came out of ASM a few days ago. Now it's back in the ASM framework. In fact, two other stocks, Adani Power and Adani Wilmar, are under short-term vigilance, right? In fact, promoters have also pledged additional shares of two Adani Group companies, Adani Transmission and Adani Green, in favor of SBI trustee. And the entire group has repaid bridge loans to the tune of $500 million. That's according to reports. We also have a query coming in from Aditya on Adani Ports in particular. How should one play these stocks, given the fact that every day there's some news flow regarding the stock, and yesterday we saw the stocks gaining for a sixth straight session on the trot? Do you think this bringing back Adani Enterprises under the ASM framework will put the stock under pressure in today's session?
First of all, we need to look at the overall. Out of all the Adani stocks, the stable counters are Adani Port and Ambuja Cement. So these are the two stocks where we are bullish on, and we see some sort of a stability and a gradual up in these two counters. As we have one query on Adani Port as well, so I would like to start with that. 600 is a good support for Adani Port, and from positional perspective, it can move towards 800 to 850 in a very near to short term. So at current level, I would rather wait for some sort of a decline and a dip towards 680 to 660. Post then there could be a good risk and reward, and a long position can be initiated. We have a positive outlook in this particular counter. Apart from that, Ambuja Cement is another counter. We have seen comparatively lesser volatility in these two counters specifically. So 350 should be the stop loss for Ambuja Cement for any sort of long position. Declines could be used as a good buying opportunity for the upside target of 450 to 500 as a positional bet. So these are the two counters. Apart from that, I would like to stay away from Adani Port, Ambuja, Adani Wilmer, and also Adani Transmission and Adani Grid. All these sort of counters where we have seen huge amount of volatility. But out of remaining all the counters, if I would like to go with one particular counter, that could be Adani Wilmer, where we can expect further momentum to continue towards 480 to 500. But remember, it usually trades on circuit to circuit, so keep a strict stop loss below 430.
So, well, that's the call on Adani Group stocks. Let's also focus in on the auto ancillary basket then. Bharat Forge will be starting an e-bike manufacturing facility via its subsidiary in Pune, and that unit has a production capacity of 60,000 units per annum, which is scalable to 1 lakh units per annum. Now, if you look at the stock, it's very close to its 52-week highs, although on a YTD basis, it has lost somewhere around 6% or thereabouts. But do you expect it to conquer that 52-week high anytime soon?
Yes, very much possible, Nandita. If you look at in last 3 to 4 months, we have seen a lot of consolidation. It has formed a major top near about 910 to 915 zone. At the same time, good part is that it has a very strong support near about 800. So at current level, the risk and reward is very much favorable for the long position. One can initiate a long position at current level as well, keeping stop loss below 800 for the upside target of 870, 900 and 920. So these are the three immediate targets that can be expected. Any decisive breakout above 915 will open upside for 950 to 1000. So it is, heading towards is the 4-figure mark of 1000. But for that, one may have to wait for some more time. But at current level, yes, definitely looks attractive.
Well, Bharat Forge looks attractive at current levels. Let's also talk about Kirloskar Oil. Yesterday, the stock rallied somewhere around 18% on an intraday basis, hitting a 5-year high. Now, news flow regarding this counter is that 10 investors have picked up somewhere around nearly 14% stake at an average price of 322 rupees a share. Promoters Kulkarni family have offloaded a stake worth 18% stake worth 825 crores or thereabouts. How would you play this counter now, Kulkarni Oils? Kirloskar Oils.
Right. Well, Kirloskar Oil, if you look at the overall structure, it is having slightly lesser volume. Looks slightly illiquid, but if you look at the major structure, it has been oscillating in the range of 420 to 300. So that's precisely 150 point trading range for this particular counter. It has a major hurdle near about 430 that needs to be taken off for any sort of positive momentum. But at current level looks positive. We can expect further momentum to continue towards 420. So that should be the immediate target. Keep a stop loss below 370, and the outlook looks slightly on a positive side on immediate basis.
Right. The next counter on my list is Shriram Finance. Now, Small Cap World and New World Fund have bought 70 lakh shares at an average price of 1225 rupees per share. Given the fact that the stock saw a 2% rally in yesterday's session, do you expect this counter to continue with this up move, or it's inching towards its 52-week highs of 1500 or thereabouts? How soon would you expect this counter to achieve that level?
Right. If you look at the structure in last couple of months, we have seen a gradual decline, and after hitting near a high near about 1400, it is trading in a falling channel. So to negate this particular formation, it needs to take out 1315 level on a higher side. So post then we can expect a positive momentum to continue. But at current level, those who are already holding the long position can continue to remain long, keeping stop loss below 1230. The upside is open for 1300 on immediate basis, and post then 1350 to 1400 could be seen. But for that, one needs to give some time. It is slightly slow mover compared to the other financial stocks.
Right. The next stock on my list is Sequent Scientific. It has terminated an acquisition that it had announced back in November 2022, Tineta Pharma. The acquisition has not materialized. So this is one stock that will be in focus today. What kind of levels are you expected on this counter today?
It's in a complete downtrend after hitting highs near about 330 in 2021. This counter has constantly formed a lower top and lower bottom formation, and it is in a declining trend. Currently reached the levels of 62. Further decline cannot be ruled out, but after a sharp sell-off that we have seen in recent times, it has gone into extremely oversold territory. So some pullback towards 68 to 70 cannot be ruled out. But at the same time, I would advise to stay away from taking any aggressive long position at current level. If at all somebody is already holding the long position, then one should keep a strict stop loss below 56 for the long positions and only play for a pullback, not a trend reversal.
Right, another stock in focus today is Gokuldas Exports. Sources suggest that Clear Wealth Consultancy is likely to sell as much as 8.25% stake via a block deal, and the block deal size is nearly at 320 crore rupees or thereabouts, and the floor price has been set at 390 rupees per share, which is at a 4% discount to yesterday's close price. Given the fact that the stock has gained somewhere around 11% over the last 1 month, do you expect this stock to see some upside in the near future?
Yes, quite possible. The stock is in fact oscillating in the range of 320 to 450. And looking at the overall structure, the trend is turning slightly on a positive side. I think at current level, the risk and reward still looks favorable, keeping stop loss below 370. The upside is open for 430 to 450. So the outlook looks positive. And we can expect if somebody stay put for a little longer term time frame, that 500 can be seen in next 3 to 6 months. So the outlook looks positive. One can stay put for the upside target of 500 from little longer term perspective.
Right, let's take up a query on Nazara Tech then. Maheshwar Bhanu has written in and he wants to know your thoughts on Nazara Tech. He's saying that since October 2021, the stock has been stuck in a downtrend. Can it be held for a bounce, or is it time to exit this counter?
I think if at all we see any bounce, that could be a good exit opportunity. The trend is certainly on a negative side. Although the only good part for this particular counter is that it has a multi-month support near about 480. So at 480, one can keep a stop loss and one can play for a pullback. Any pullback towards 550 to 600 could be a good exit opportunity. I'm not expecting any major trend reversal on immediate basis, but if at all it takes out 650 mark going forward, then there could be possibility of some sort of a base formation. But on immediate basis, the trend is slightly on a negative side.
Well, the trend is looking negative when it comes to Nazara Tech. Let's take a query on Coforge. This one is coming in from Chetan, and if you look at Coforge, it has been in a steady downtrend. The large cap IT pack is in fact doing well this year, but what are your thoughts on some of these mid cap stocks now?
Well, see, certainly we may see some pressure in mid cap and small cap IT space. In fact, large caps are doing good, you have rightly mentioned, and we constantly have our positive outlook on the counters like TCS, Infosys and HCL Tech. So these are our preferred bet going forward from here. If you look at the Nifty IT index specifically, it is stuck in the range of 29,000 to 31,500. So that's 1,000 and 1,500 point trading range for the Nifty IT index. And currently it is trading somewhere in between. So any dip could be a good opportunity to enter into Nifty IT space from little longer term perspective. And from trading point of view, I think there may not be much opportunities. But as far as Coforge is concerned, it is again stuck and it is oscillating in the range of 4,000 to 4,500. Any breakout above 4,500 will change the texture of this particular counter, and then upside will open up for 5,000 sort of levels. But at current level, one can stay put. On immediate basis, the stop loss comes around 4,150. The upside is open for 4,500. So the outlook looks slightly on a positive side. One can stay put.
Well, the outlook on Coforge is on the positive side, so you can stay put for now. Well, I hope that answers your query. Well, with that, we have come to the end of the query segment because we are completely timed out today. But before I let you go, Nilesh, can you share your stock recommendations for today for our viewers?
Sure. I have two buy calls. Specifically, if you look at the defense space, where we have seen good attraction in last couple of trading sessions. So BHEL, this particular counter has done well in last 4 to 5 trading sessions, formed a bullish candle yesterday, and the momentum looks strong and the upside is open up for 82 sort of levels on immediate basis. One can keep a stop loss below 76. So the first buy would be on BHEL. Second stock we are liking is from capital goods space, Cummins India. We have seen a good up move, and this particular counter, in fact, is in a secular uptrend and hit fresh all-time high levels yesterday. So the outlook looks positive for Cummins India. The upside is open for 1700 on immediate basis and 1720 will be our immediate target. Keep a stop loss below 1645. So we have two buy recommendations, Cummins India and BHL.
BHL and Cummins India, two buy recommendations coming in from Nilesh this morning. Well, with that, Nilesh, thanks a lot for taking out time and joining us this morning and addressing all of your queries as well. Well, with that, we've come to the end of morning trade and it's a goodbye from me, but don't go anywhere because coming up next is Opening Bell.